All right, so today I want to jump into stablecoins and kind of the idea of where the stablecoin market is going. And the concept is to maybe bring actually a stablecoin to the show. And we wanted to talk with them and learn a little bit more about how this potentially plays out in the financial future, both on crypto and in the traditional fiat systems. My name is Paul Barron. Welcome back to TechPath today. Joining me is Mr. Nevin Freeman, who is the CEO of a company called Reserve. Great to have you on.
Thanks for having me, Paul.
Excellent. So, Nevin, the first time I heard about Reserve, I went over to your website, got a chance to see some of your investors. You're in with some very heavy hitters, so that obviously something's going on here at Reserve. Give us the lowdown on what Reserve is doing, kind of what you guys are up to.
Sure. So essentially, Reserve is a stablecoin project, and the thing that distinguishes us from most other stablecoin projects is that we've decided to focus on making stablecoins accessible and useful to people in countries that have high inflation, instead of just to people who want to speculate on cryptocurrencies. I don't have any problem with crypto speculation, but we think that there's actually this huge set of people in the world who really could benefit from stable crypto. And the infrastructure that's typically made in the cryptocurrency industry is built for speculation because there's so much money to be made serving speculators. So we decided, okay, maybe we can sort of get out ahead and actually serve a totally new market, really sort of individual people and businesses that just have a need for stable currency.
Now, you guys have obviously went into some of the, you just mentioned them, some of the markets that are under a bit of stress right now, and that's, countries like Venezuela, Argentina. Explain how some of the use cases have been implemented there within those countries with Reserve.
Mm-hmm. So the basic service we offer is an app. It's like a kind of like a simplified dollar bank account. It sort of looks and feels a little bit like a copy of Cash App because we kind of copied the interface from Cash App. But what's special about it is that you can deposit and withdraw to and from stable dollars, stable crypto dollars, to and from local currencies, including the Venezuelan bolivar and the Argentine peso, also Colombian pesos, and a few other mechanisms. And so the way that that's typically used, it started off being used just as a way to sort of get money from point A to point B, sort of get money cross borders or something like that. And then people started to use it to save money. You move your volatile money into essentially digital dollars, and you have a savings account, and then you can pull it back out again whenever you want to spend. And these days now it's already starting to be used directly just as a transaction mechanism in dollars. So people are moving their money in and saving it that way, and then just going and transacting directly with merchants or other people by paying in digital dollars.
Mm-hmm. Have you seen a big adoption curve in some of these countries where the actual merchants have started moving into that system versus the traditional, both obviously not in their own reserve currency, but in many cases, if you look at countries who have already started to opt out of their existing fiat system and moving either to US dollars or maybe to the euro as their trading vehicle, have you seen any kind of movement in that space going over to Reserve from a digital aspect side?
Yeah, we have started to see that. At this point, there are a bit more than 4,000 merchants that accept Reserve as a means of payment. And those range from larger merchants, like bigger chain grocery stores, down to lots and lots of small individual vendors and so on. You can go to open air markets in Caracas, Venezuela, and you'll see signs of people accepting Reserve to sell spices and all sorts of little things. And that's mainly happening in Venezuela more than the other countries we serve, because in Venezuela transacting is so much more difficult. There's so much more friction. And there aren't a whole lot of good options. So we're seeing that adoption by merchants happening faster there than in other places.
Talk to me about the flexible pool of stablecoins. How does that work with Reserve actually plugging into what seems to be a lot of different stable platforms out there to help? Is it propagating Reserve as a stablecoin? How does that actually function?
Yeah, it's a good question. So basically, we decided not to issue our own dollar-backed stablecoin ourselves, but rather to piggyback on top of dollar-backed stablecoins that already exist. And the way that works is, like today, the RSV token is backed by USDC, Paxos, and TrueUSD, those top three logos you can see. And those other two
Yeah.
logos are sort of there to indicate other stablecoins could be swapped out and be part of that basket. That's what we mean by a flexible pool of stablecoins.
Ah,
And let me talk about like why flexible, like what's the point of the flexibility? The point of the flexibility is so that if any one of those stablecoins encounters any kind of issue, if the market comes to be
exactly.
concerned about its backing, or if there ends up being regulatory pushback and maybe that stablecoin has to shut down or anything like that, we have a robustness to that because those coins can be traded out actually in like a somewhat decentralized way that doesn't just depend on us. And in the future, our protocol will be extended in the relatively near future to be able to create additional stablecoins with additional baskets, backed by other assets. So right now we just have this very, very basic US dollar stablecoin, and that's because the people that I've just been referring to that we've been trying to serve in these countries mainly just want US dollars. But we can build on top of that. We can offer other more interesting things, stablecoins that are backed by DeFi tokens that have a little bit of yield baked
Right.
in. That's something that we have on the horizon. And then in the further future, we want to offer something that's a little bit more like commodity money. That's a stablecoin that's backed by asset-backed tokens of a variety, things that aren't just fiat currencies, so that people can actually start to choose whether to use fiat money or something else.
Nevin, I want to get to when you look at the digital dollar potential across the world, you look at what China has done with the digital yuan. You have Europe now trying to essentially put several projects into play. We've got MIT moving on to projects here in the US around digital currency across a lot of different fiat systems. How do you see that landscape panning out, say, in the next couple of years? Because it's likely that we're going to see much more of digital currencies actually flowing into the market before we see maybe a central bank actually moving into this space. What are your thoughts on that?
Yeah, it's a really good question. And I only have my own view of the world. Like I understand a lot about what we're doing, and then there's lots of interesting things happening that I'm not hip to. Um, what I've noticed though is that there's immense demand for making transactions in stablecoins amongst businesses.
Yeah,
And I've heard a lot about that outside of the Reserve project, mainly in Asia. A lot of people are using stablecoins to get money across borders in China and in Southeast Asia. The numbers are starting to get pretty impressive there. And then we see that too, where actually on a daily basis, a larger portion of the total dollar value that's transacted on our platform, even though we made it as a consumer platform, it's kind of like a simple consumer app, a larger
right.
portion of the dollar value is transacted by businesses who are
Hmm.
using the system. And actually, their ultimate goal usually is to get money into a US dollar bank account that they already have as a business. But
Interesting.
making stablecoin transactions ends up being a lower friction, a faster, and often a cheaper way to get that money, from one country into another country and into another banking system. So I think that's something that we actually, in the crypto space, undervalued a little bit earlier on is just the sort of sheer simplicity, the fact that there's no transaction limits and the transactions sort of always go through in a relatively short period of time. Even if you complain about transaction times and gas prices, it's still often much faster and cheaper than other
Right.
sorts of methods for moving large amounts of, even just US dollars in the banking system. So I think that in addition to this wave that we're seeing of individuals that that have to deal with high inflation adopting it, I think we're going to see a lot of business adoption, not just in those markets, but in many markets all around the world, because it's just a little bit lower friction way to move your money, especially across borders.
There has been, some big movements in the ecosystem for the banking system to try to basically circumvent what is SWIFT, which is a much more lethargic way of being able to transact on an international basis of moving dollars like what you're referencing. But when you look at now the crypto community, which is a global community, they're moving, assets from one country to another. The potential there is I would think pretty dramatic. When you look at the roadmap of where Reserve is going in the next couple of the years, where do you feel like you guys are really focused in terms of some of the solutions that you'll bring to market?
Yeah. So in the near term, we're going to continue to focus on people and places where there are really big issues with currency, where there really is a need for an alternative. We've been, as a project, looking into how we could possibly start to offer our service in Lebanon, for instance, which is sort of famously going through a high inflation
Yes.
period right now. It's really one of those upsetting situations that you wish would never happen. And there are several other countries around the world that have similar issues, that have high inflation and or capital controls, and sometimes you have a situation where a country sort of doesn't have as many problems internally financially, but because of the way that it relates to the rest of the world, you get sort of the banking system deciding to lock citizens of that country out of the banking system, even though a lot of the individuals in that country are perfectly safe to deal with, are not doing anything illegal or nefarious. So I think in the near future, we continue to plan to expand to more and more countries like that, where people just have problems with ordinary financial transactions. And we hope that through basically offering them, dollar crypto, and eventually things beyond dollar crypto, we can really basically just offer the normal services that someone in the U.S., for instance, is used to with a bank account or with Cash App, but really to anywhere in the world.
All right, so that unpacks a lot, because you've got a lot of countries that are at somewhat a very interesting tipping point within their own currencies. You mentioned Lebanon, exactly the kind of scenario that they're facing now, much like what Argentina, Venezuela, and several others. We could see this also start to become a factor in Afghanistan. We could see this in many countries, including Iran. If you look at just the sanctions on Iran, a lot of the people of Iran are really suffering and just being able to move dollars and any kind of currencies. Do you feel like regulatory scenarios could really get in the way of a lot of these kinds of platforms moving forward? I mean, I was looking at your list. You've got Sam Altman, and if you don't know, that's Y Combinator. You've got Coinbase Ventures, Peter Thiel. These are some big names that are invested in you, so they must see something here that really is close to changing the world monetary system. Talk to me about regulation and how that potentially could affect the world.
Yeah, it's a good question, and so much of what we end up spending our time thinking about is regulatory, both like domestic, U.S. regulations, and the sort of like global AML regulatory approach, as well as local regulations in each of these countries, because they're all different, it ends up being a challenge not just about the letter of the current law, but also kind of a political challenge. It's people start to think about like, well, where is this all going? What does this mean about monetary policy? What does this mean about our ability to like monitor transactions to prevent crime? And these are not easy questions. I guess what I can say about like the Reserve project in particular is that we decided early on, to focus and be very careful about following all U.S. laws. We have to, because we're a U.S.-based project.
Sure.
And a big piece of that for us is, how do we operate in countries that have some sanctions, right? Venezuela being a prime example. In Venezuela, if you're part of the government, you are sort of by definition sanctioned. And so we've had to build a lot of our own filtering methodology and technology in order to handle that, in order to make sure that we can actually distinguish between who is legally allowable for us to deal with and who is not. So I think part of our sort of special power as a project right now is that we can, as a U.S. financial company, operate in a country like Venezuela because of that time and care and effort we've put into building that system. And then, but zooming out, thinking about stablecoins in general, not just Reserve, I think that there's a really fundamental question that we as a society, including our lawmakers, will have to confront, which is, do we value the benefit of giving access to stable currency to more people in the world more or less than we are concerned about the potential consequences for regulation and crime spotting by making financial systems more open, right? It's like, it is the case that stable coins today, not just Reserve, but any stable coin, you can pass that coin around pseudonymously. And yes, it is the case that if you redeem that system, you have to go through a KYC. But many people are starting to do transactions back and forth where they don't really need to redeem. And so I think that it really is going to end up being a question of, how much do we care about that benefit to those individuals and to society compared to the potential cost that we might take on from reducing that ability to watch transactions and spot crime. And so sorry to ramble so long, but like one mission that we are starting to go on as a project is actually to try to convey that value, to convey the value to the individual that is possible by making access to stable currency, available to them. And so we hope that over the next year or so, the story in crypto shifts from it's just pure 100% speculation to like, okay, there's a lot of speculation, but also we're starting to see sort of the true value of crypto as money, and we're starting to see it really actually help economies and help individuals on a massive scale. And I think that if the world can come to understand that soon enough, that might really help and that might actually change the way that regulators decide to treat stablecoins over the next 5 or 10 years.
I look at the model and it seems much more sound, especially around stablecoins, using the, kind of this hybrid approach of being able to back the stablecoin of Reserve. Why would not countries start to go into this direction with their own digital currencies, including the US for that matter, in being able to utilize a full marketplace of stablecoins as the monetary backup for those, so that essentially you kind of eliminate the potential for a currency to fail?
It's a good question. And I think the fundamental answer is that there are definitely potential benefits and real benefits when things go well for a country to control its monetary policy, right? Because you can use control of the currency to steer the economy of the country. And I don't claim to know exactly which situations that will always work out and which situation it won't work out. Clearly, in some situations, it doesn't work out. We know that from history and from all of the currencies that have failed. And so if you are in charge of the currency apparatus for a country and you believe that you can use that to productively steer the economy of the country, then it looks like a bad idea to give up that control. It's like, well, we don't see anything going wrong anytime soon, and we get these benefits on a, sort of ongoing basis from controlling monetary policy. So let's not give that up. I think that's the basic reason why something like what we're offering wouldn't necessarily seem attractive for, a functioning country with a functioning currency to switch to. Now, in cases where the currency has already completely fallen apart, sometimes countries do voluntarily choose to have a currency substitution, to basically say, all right, we're giving up. We acknowledge, this did not go well 1 or 2 or 3 times in a row. And so we're just going to use a foreign currency that seems more trustworthy. Oftentimes this is the US dollar. But in the future, we could see that voluntary currency substitution start to happen with crypto assets, with cryptocurrencies that are, they would have to be stable. But it may actually, eventually, some number of years from now, make sense to choose something that isn't managed by another country, that instead is managed in a decentralized way and is backed by assets. And that's the thing that we're looking to offer to the world, and then see, which individuals and decide to use it.
Yeah, I think when you look at all the hot spots around the world, currency is usually at the nemesis for many of these countries, and like you had mentioned, many of them often default to the world's reserve currency. Also, China, we've talked about that on our show, is that the digital yuan could eventually become a reserve currency, especially in the Belt and Road, project nations where we see a lot more involvement with China, and could move into that space, which then could create kind of a world balance shift between the US dollar and what could be the digital yuan at some point in the near future around digital currency. So there is a lot at stake here when you look at the growth, now I can see why Peter and the crew are so active on helping you guys achieve this as a goal. What are some of the future plans for Reserve in the near future and maybe in long term for you guys?
Yeah, it's a good question. So in the near term, we're looking to just offer the service that we offer to more and more people. Right now, we're in a situation where often more people want to sign up to our app and use the service than we can manage to serve. And so right now we're doing about 15,000 transactions a day in that app. It's about $1.5 million worth of value that's being transacted. Like I said, that's mainly people in Argentina and Venezuela, who are escaping hyperinflation. But we want to offer that to millions of people in each of those countries, and millions of people in further countries. And so we're very focused on, there's like a zillion little problems that you have to solve operationally and technologically and sometimes legally to just keep offering that same service, that same level of service to more and more people. So that's definitely the main focus of the project right now. The second thing that is coming up in the near term is the launch of the next version of our protocol. Like I alluded to earlier in the conversation, we're interested in offering additional stablecoins that have different properties that aren't just US dollars. And we're not sure exactly how quickly we're going to be able to launch that protocol. It's something we're working on actively. And there are a couple of open research questions, mostly around decentralized governance, that make it hard to know exactly how quickly we'll get that out. But we're really excited for that because we'll end up being able to offer those alternatives to our app users and also to the entire crypto space because of the open nature of cryptocurrencies. So those are the two big things we're focused on near term. And and then in the very long term, like I've mentioned, the goal is to eventually really offer a robust cryptocurrency that is stable, that is distinct from fiat money, that isn't dependent on the US dollar or any fiat currency. Kind of just trying to do what some of us thought Bitcoin could eventually do in the long term.
Exactly.
But where we've concluded that Bitcoin, because of its monetary policy, probably will remain volatile, kind of like gold is today. So basically just trying to offer that basic true cryptocurrency. It's a very long-term project, something that we think about on the scale of decades. That's sort of where we're going eventually.
Interesting stuff. Good to have you on the show, Nevin. Thank you so much for stopping in. I can't wait to learn more as you guys continue your project exploration, especially around some of this, some of the countries that really could be utilizing this type of platform, which is going to only open up the amount of people moving into crypto and also digital currencies worldwide. So it's going to be fun to watch. But thanks for stopping in. We appreciate it.
Yep, you're welcome. Thanks for having me.
Excellent. So you guys are tuned in over on the podcast right now. Make sure and give us some ratings over there. We love you on Spotify, man. Thank you so much for all the listens. And of course, the follows over there. If you're here on YouTube, that's the best place to reach us. Hit the like and subscribe button. This is one way you can support the channel. And of course, we are on our track to hit 100K here shortly. And of course, if you guys are watching and you want a topic on the show, maybe it's a project or a technology that you want us to explore, get some founders on, reach out to me on Twitter @PaulBaron. We'll catch you next time right here on TechPath.